If you're an accountant and you want to scale to $1 million firm, stop telling yourself that better work alone is going to get you there, because it won't. Plenty of accountants are technically solid, sharp on compliance, decent on tax, and still stuck in the same loop year after year, fighting fee pressure, chasing referrals, watching clients leave over a tiny price difference, and wondering why the practice never quite breaks through. Here's why. Most accountants are selling a service the client secretly believes can be replaced. T2 done, year-end done, notice to reader done, maybe a quick conversation about salary versus dividends, maybe a comment about retained earnings, maybe a year-end tax idea that sounds smart in the meeting and then dies on the drive home because nobody actually implements it. That is Paula. Paula is competent. Paula works hard. Paula means well. Paula is also painfully easy to compare, painfully easy to shop, and painfully easy to replace. Now look at Miriam. Same profession, same technical base, same kind of clients, totally different positioning. Miriam realized early that business owners do not actually want accounting in a vacuum. They want clarity. They want coordination. They want somebody who can look at the corporation, the retained earnings, the remuneration mix, the tax strategy, the investment side, the retirement side, the estate side, and tell them whether the whole thing is actually working together or is it just sitting in different buckets pretending to be a plan. That is where Miriam pulls away, and that is where accountants who want $1 million firm need to pay attention. She stopped presenting herself as the person who files and started presenting herself as the person who sees the whole financial picture and brings the right people into the room. Huge difference. A client walks into Paula's office and gets a file completed. A client walks into Miriam's office and gets questions that immediately raise the perceived value of the relationship. How much corporate surplus is sitting idle? Is the tax plan actually being executed after the filing season conversation ends? Is there a retirement structure or just a few accounts? Is the estate side coordinated or ignored? Is the investment side aligned with the accountant's tax strategy, or is some random advisor at the bank undoing half of the planning with in-house product shelves and mediocre implementation? That is where the practice starts becoming sticky, because clients do not stay forever because you are accurate. They stay when leaving feels risky. They stay when your service feels integrated. They stay when you stop sounding like an invoice and start sounding like infrastructure. Now here is where most accountants hesitate. They think, I'm not a wealth manager. I'm not a financial planner. I'm not an estate lawyer. Correct. You are not supposed to be. The move is not to pretend to be everything. The move is to become the accountant who has the right wealth manager attached to the client relationship, so the whole thing becomes deeper, harder to replace, and far more referable. That is exactly what Miriam did. She partnered with a top-tier portfolio manager, and that changed the economics of her firm. Now, when clients ask bigger questions, she does not just shrug and say,
"Well, you should probably talk to somebody."
She can say, good, I have the right person. Not some random referral, not a golf buddy, not a bank rep smiling through a product shelf, a real portfolio manager. That distinction matters more than accountants realize. A chartered investment manager has advanced training. Fine, serious training matters. A portfolio manager is the level where the responsibility actually sits. That is discretionary authority. That is fiduciary duty. That is the legal obligation to put the client's best interest first, not the bank's quarter, not a firm's in-house shelf, not a commission-driven product push. Clients do not understand the difference unless somebody explains it to them in plain English. And when the accountant becomes the one explaining it, the accountant's status rises immediately. Now, the client is not thinking, this is my tax preparer. They're thinking, this is the person who protects the whole architecture of my financial life. That is an entirely different relationship. And once the right wealth manager is in the room, the accountant's value proposition gets stronger fast. The client fee, even if it's around 1.5% on the investment side, stops sounding like just investment management and starts being understood properly. What is included? That is the real question. A serious setup should include access to a certified financial planner, real financial planning, tax coordination, retirement design, estate planning conversations, implementation around the accountant's tax strategy, and someone who is actually managing the portfolio at a high level instead of parking assets in whatever product shelf is easiest to sell. That is how Miriam explains it, and that is why her clients do not flinch the same way Paula's do. Paula talks cost, Miriam talks completeness. Paula looks like a service provider, Miriam looks like a strategic operator. That gap matters. It affects retention, referrals, the average client quality, and the wealth manager Miriam brings is not just any advisor with a nice bio and decent haircut. This is where the accountants need a real checklist, because if you're going to build your growth around a partnership relationship, the partner needs to elevate your brand, not dilute it. Long track record across different market environments, not one hot streak, not one easy cycle, real reps. Strong grasp of fundamental analysis and technical analysis, because valuation matters, but so does execution, market behavior, and money flow. Access to private opportunities when appropriate, because sometimes great clients want more than the standard menu. An additional options trading license is a plus, not because every client should be doing options, but because it tells you there is more depth there for hedging, special situations, and sophisticated strategy when suitable. A law degree is a plus, because the deeper the planning gets, the more helpful it is when the person driving the advice understands structure, documentation, risk, and the legal side of how decisions affect a family over time. Now put yourself in the client's shoes. With Paula, they get accounting. With Miriam, they got accounting plus a serious path into portfolio management, planning, tax coordination, retirement structure, estate conversations, and actual implementation. One of those gets tolerated, the other gets talked about, and that changes everything. The referral dynamic improves, the retention rate improves, the quality of the client conversation improves. The practice stops competing with cheap shops and starts attracting people who want the full scope handled properly. It also works both ways, which is where the business gets interesting. The accountant refers the right client to the right portfolio manager. The portfolio manager refers the right client back to the accountant. The client feels looked after from multiple angles. The accountant becomes harder to replace. The wealth manager gets a better client relationship. The referrals start compounding because the service actually deserves to compound. That is a real growth mechanism, not motivational fluff. So if you want to scale your accounting firm to $1 million, here's the practical shift. Stop marketing yourself as the accountant who does the books and handles tax. Start positioning yourself as the accountant who protects the whole financial structure of the client and has the right high-level partners to execute where your lane ends. Audit your current book. Which clients have corporations, retained earnings, fragmented advice, weak planning, investment confusion, no retirement structure, no estate coordination, or advisors who are clearly not aligned with your tax work? Those are the easiest wins. Build a checklist: fiduciary duty, portfolio manager level, track record across cycles, fundamental plus technical ability, CFP support, tax coordination, estate planning, discretionary management, private opportunities when appropriate, extra sophistication where it matters. Then change the way you speak. Stop saying, "I know a guy." Start saying, "I've built a serious team around the outcomes my clients care about." That sentence alone changes how people see your firm. And if you want to book a one-on-one call with me, if it feels like a fit, I'll connect you with the same top-tier wealth manager my family trusts. Somebody in the top 5% in the country. Somebody operating at a level most clients never get access to on their own. And someone who can help you offer a much more complete service without you pretending to be anything you're not. That is how you give clients more value, make them far stickier, and build the kind of accounting firm that does not get dragged into a race to the bottom. Quick disclaimer: this is general education only. It is not personal, financial, legal, tax, or accounting advice. But if you want to build a better client experience and a stronger growth engine for your firm, book the call from the link in my bio.